Welcome to the Jay Martin Show and the pursuit of personal sovereignty. Now, my guest today is Louis-Vincent Gave, and I've been looking forward to this conversation for a long time. Louis runs a firm based out of Hong Kong and Beijing. They produce research and manage money for a large handful of high net worth institutional clients. He lives in Canada on Vancouver Island and holds a European passport. He's from France, a true international perspective, and has run his business on many continents. So today, what we talked about was the redrawing of the geopolitical landscape in relation to the energy trade. And so obviously, we're watching the developments of the hot war in Europe and how this is going to impact the global supply of energy to which countries. And right now, you could look at the top 10 energy producing nations in the world and speculate that about 70%, if not maybe more, are going to find themselves over the next 5 years more aligned with the East than they historically have been with the West, and how that changes things. And obviously, this is in response to the US confiscating financial assets from Russia, confiscating assets of Russian oligarchs, and sending a message to the world that your US dollar financial assets or your international assets aren't as safe as you thought they were, should we deem you a bad actor. Now, lots of stuff to get into there, so we get into it on the conversation. There's a pinned comment beneath this video where you can subscribe to my weekly newsletter. I absolutely love writing it and would love to have you join the team. So hit that link if you want to hear from me every Sunday. Here is Louis-Vincent Gave. Enjoy.
This is Jay Martin.
All right, here I am with Louis Gave. Louis, thanks so much for making the time and coming on the show today.
Well, amongst neighbors, got to help each other out.
Yes, that's right. I didn't realize how close, actually. So that's been fun. For anyone who's not familiar with you, Louis, could we start with just like a quick 30-second overview of who you are and how you spend your time?
Sure, absolutely. So my name is Louis Gave. I grew up in France. I moved to Asia in the mid-90s and spent most of my career there working in financial markets, first for a French investment bank, and then for a business that I started with my father, Charles, and my friend, Anatole Kaletsky. The business is called Gavekal. It's headquartered in Hong Kong with an office in Beijing. And we really have two main business lines. We write and publish research for institutional investors around the world. And we also manage money also for institutional investors, mostly in Asia, with a very solid bias towards China and especially Chinese fixed income. So the past 25 years or so of my life have been really about, going further and further down the wormhole of China in every aspect: Chinese markets, Chinese economy, Chinese politics. It's been a fascinating period, of course, because so much has happened in that small time frame. A few years back, the reason I say amongst neighbors, we got to help each other out. A few years back, my wife and I decided to move back to the Western world and decided to settle in British Columbia, initially in Whistler, because we had a house there, and then on Vancouver Island, where we're now based. But I still drive through Squamish on my way up to Whistler all the time. So next time, maybe if I can stop over for a beer.
Bring the bike. Absolutely.
Yeah, that's another option.
I'll get you up for a shred. Okay, very cool. So following that line of thought, then let's talk about China a little bit in the context of this war in Europe. I look at this as who's going to be the winners and who's going to be the losers, and it seems to me that China is in a position to win big in this scenario. And so, is that suspicion correct? And if so, why? And if not, why not?
I agree with you, but I'd like to rewind the clock just a little bit. I think for, today, in the past few months, well, since this Ukraine invasion, we've witnessed two things, right? We've witnessed the weaponization of the Western financial systems against Russia. We captured all the assets of the Russian oligarchs. We captured the assets of the Russian central banks. And facing this weaponization of the financial systems, Russia decided to weaponize energy. But before all of this happened, if you're China, there was a previous weaponization. And that first weaponization occurred in 2018, and that was the weaponization of the semiconductor market. In 2018, the US told the world, if anybody sells semiconductor to Huawei, then they can't sell to the US anymore. And they can no longer use US patents. And this caused, in essence, Huawei to implode. Huawei, which at the time was really China's industrial jewel, China's pride and joy.
Yeah.
Imagine if 10 years ago, the US had turned around and said, nobody's allowed to sell semiconductors to BlackBerry, and BlackBerry had imploded. Canadians would be pretty upset. So when this occurred in 2018, I think there was a realization amongst the Chinese leadership that the US no longer is a commercial partner, it's no longer a friend, but it's not even an economic rival, but it's now an outright adversary. And the US is now wishing harm on the Chinese economy. And so the question became, how do we cushion ourselves against that? Now, if you're China, you have three massive weaknesses. Those massive weaknesses, the first one, which the US exploited in 2018, is dependence on foreign semiconductors. So the way China is trying to deal with this is by plowing money into its own semiconductor industry. The second weakness of China is that China still needs to import massive amounts of energy. And that 80% of the energy that China imports is imported through oceans that are controlled by the United States. So if the US ever decided to do to China what it did to Japan in the 1930s and embargo energy, then the Chinese economy could rapidly implode. So that's the second big weakness. And then the third big weakness of China is that most of China's trade remains denominated in US dollars. And so if tomorrow the US decided to do what it's done to Iran or to Venezuela, and to say nobody is allowed to trade with China in US dollars anymore, then Chinese trade would implode, the economy would struggle, etc. So since 2018, China's been trying to do three things: reduce its dependency on foreign semiconductors, and that's a big ask because it takes a lot of investment and it's challenging. The second is reduce its dependency on energy imported through the oceans. And the third is reduce its dependency on the dollar. Now, why did I want to illustrate this? Because the Russian war, the Russian invasion of Ukraine, helps China dramatically on the last two of these three necessities. On the second one, on energy, basically China all of a sudden becomes the only buyer of Russian energy in size. And I know Russia's selling energy to India and it's selling energy to Thailand, et cetera. But, China shares a massive land border with the US. And I also know, of course, that most of Russia's energy and, land border with Russia, not the US. Apologies. China shares a massive land border with Russia. I know that most of the energy infrastructure in Russia is geared towards Western Europe. But that happens to be the one thing that China's pretty good at: building energy quickly and on the cheap. Building infrastructure quickly and on the cheap. So in the coming years, I think one thing you can bet on is that you're going to see dramatic investments by Chinese firms into Russia and into the Russian energy sector to basically capture a lot of the energy that used to go west will now be going east. So that's the first thing that changes. The second and massively important thing that changes is that this energy that China is now buying is being bought in renminbi rather than US dollars. And that's a dramatic shift in our global financial architecture. The fact that the world's number one energy importer is now shifting its trade with Russia, the world's number one commodity exporter, from US dollar to renminbi, is a dramatic paradigm shift. Look at it this way. China every month buys roughly $8 billion worth of commodities from Russia. So every month, so that's roughly $100 billion a year. That's $100 billion that China used to have to earn by selling stuff to the US, selling tennis shoes, tennis rackets, underwear, you name it. They would
Yeah.
earn that money, and then they'd be able to go out and buy the energy they need from Russia. Now, all of a sudden, they can just,
Because they had to buy it in US dollars. That's why they had to
because
go with. Yeah.
they had to earn the dollars first before they could spend the dollars.
Yeah.
Now, all of a sudden, they get to print the renminbi, and they get to give Russia renminbi for energy that they used to have to pay in US dollars. Now, not only that, this changes the equation globally, because now what the next thing that happens is China can turn around and tell Indonesia, I like your coal so much better than this Russian crap. Your coal is such better quality than this terrible Russian coal. However, Russia gives me deals in renminbi. For you, I have to pay in US dollars. So unless you accept my renminbi, I'm going to keep buying from Russia. And then you can do the same thing for Brazil with the iron ore, and you can do the same thing in Saudi Arabia with the oil.
Right.
And so, this month, for the first time ever, Russia became China's number one source for oil, stopped being Saudi Arabia and became Russia.
Mm-hmm.
And so over the long term, if you're Saudi Arabia and you look at this, you think, okay, maybe this isn't such a big problem immediately, because Europe is desperate for energy. So whatever I'm not selling to China anymore, I can sell to Europe. But Europe at the same time is saying by 2035, we need to be all electric cars. So there's a back and forth there. The bottom line being that if you're China, and if you think that you have three key weaknesses: semiconductors, energy, and US dollar, the current war and the diplomatic isolation of Russia helps you solve two out of these three weaknesses.
Hold up, quick interruption to shout out one of our partners here at the Jay Martin Show. This is Masterworks. Now, Masterworks is a platform that gives retail investors like you or I the opportunity to fractionally own pieces of blue chip art. So we're talking about Picasso, Monet, Banksy, etc. Now, why is this exciting? Because the smartest money that I have on my show invests in the art sector. So I want to do that too. Now, last year, I actually bought 2 pieces of art for my home. But knowing nothing about the art industry, I have no idea how they're actually going to appreciate over time. Now, I like them, and maybe that's enough. But if I want to put my cash to work in the art sector, I really want to go after the biggest names in the business, the multi-million-dollar pieces. And this is the access that Masterworks gets you. So check out masterworks.io now. Yes. No, I'm so even with this pivot to purchasing so much Russian energy, and I believe there's already discussions between China and Gazatomprom to put a pipeline underneath Mongolia straight to China and reroute the energy that's currently being pushed to Europe.
And once that's there, like once those pipelines are built, they're there forever.
They're there forever. And so you can look at this and say, of the top 10 energy producing countries in the world, it looks like 70% of them are likely to align with China. I mean, I believe China is still Saudi's biggest client when it comes to energy. Is that correct?
It is because again, it's the customer is always right?
100%. Yeah, you're going to take care of your bottom line. Absolutely.
Yeah, and so if the customer is always right, China, for practically any massive energy producer, and this is true for natural gas, this is true for oil, this is true for coal. China today is the number one customer.
Right. And then so you've got Saudi kind of in the balance. You've got India, Iran, Brazil. You mentioned Brazil. There's a handful of countries that would entertain that deal, right? We'll buy everything you've got. I mean, China will buy all the excess energy on the market more than likely. And if countries will take renminbi, it's likely to occur.
Well, in that sense, it becomes free for them, right? Because if I'm China and I'm buying a bunch of oil in renminbi, I can print the renminbi, and this means that Russia, who's on the other side, with those renminbi, either they can buy goods from China, so they buy goods, or they just reinvest them in renminbi bonds.
Now, here's a question for you then. So this may sound silly because U.S. prints money like crazy and then uses it to buy commodities. But is there a difference when this occurs in China? And I'm talking about, the net asset value of the U.S. dollar is largely tied to the confidence in the trust, the justice system, the governance, right, of the Western world. And you could argue there's corruption, sure, but relative to, authoritarian governments, it is a predictable, safe, and just country. Is a printed currency that's just being printed at will to purchase international commodities, being renminbi, does that have less value? Is it a bigger risk to accept that currency? Can the same game be played out of China that's been played from the US? What do you think?
I think that's a great point. Look, there's so many things that underpin the US dollar, but one of them, as you point out, is the rule of law. And I would say that's the greatest comparative advantage of the broader Western world, really, is the belief that you can be black, brown, yellow, white, Christian, Muslim, Jew, Hindu, it doesn't matter. If you get in front of a court of law, you're going to get the same fair shake as the next guy. And this has been, I would say, the strongest pillar on which Western economic success has been built, because it has meant that if you're a rich Chinese guy, the first thing you do when you make money is buy a house in Vancouver, because of the view that, tomorrow the Chinese Communist Party can confiscate all your stuff and throw you in a laogai, the Chinese gulag, but at least your kids will be safe in a house in Vancouver, right? And so for the past, I would say 25 years, really since the Asian crisis, we've lived in a world which to some extent was a little bit upside down, because what you had was very rich countries like the US, like the UK, like France, running very large twin deficits, large budget deficits, and large current account deficits. And those deficits be financed really by people in emerging markets. So poor countries were in essence subsidizing consumption in rich countries. And they were doing it through two ways. One of them, it's either central banks kept wanting to accumulate US treasuries on the perception that having a big cushion of US treasuries meant that in a crisis you could never be brought down, number one. Or number two, it was done by the private sector, i.e. the rich Chinese guy buying a house in Vancouver. And so the Western world could run large current account deficits funded through the sale of assets. Now, and again, because of this very core belief that you can be, black, white, yellow, brown, etc., it didn't matter in front of a court of law. You had the same rights, except we in the Western world, in our great wisdom, have just changed that, right? We've just added a little apprentices and said, except if you're Russian. If you're Russian, we can take all your shit. Like, we can take your football club, we can take your yacht, we can take your private jet, we can take your house in Mayfair. If you're Russian, you're a bad dude. Even if you have nothing to do with the decision to invade Ukraine, even if you, but just the fact that you're Russian. So, this is a very troubling change if you live in emerging markets, because you feel like, hold on, I've seen this movie before. When people get tried for being part of a group instead of being tried as an individual, when stuff gets taken away without due process, without courts of law, without debates in parliament, when just one morning Krista Freeland decides to wake up and says, you know what, we're going to take away all the assets of Russian people in Canada, and the justice minister turns around and says, well, there's nothing in the Bill of Rights that says that foreigners are have the right to property in Canada. If you're a rich Chinese guy, you think, hold on, this wasn't the deal. I bought my house in Vancouver on the premise that if ever things went bad, i.e. if ever Xi Jinping decides to invade Taiwan, this was my bolt hole. Now you're telling me that if Xi Jinping invades Taiwan, you confiscate my Vancouver house. Well, this Vancouver house isn't what I thought it was, and I don't want it anymore. And that to me is the dramatic shift that is unfolding. So to your point, this is an argument I've made several times in the past five years or so, and even more so after COVID. And that is that if you look back at the past 20 years ago, when we let China in the WTO, the argument presented, whether by Bill Clinton or George W. Bush on both sides of the aisle in every country, was that by trading more with China, they would become more like us. that we'd see the same kind of move towards democracy that we saw in South Korea, that we saw in Taiwan, that basically as China got more exposure to the Western world, they'd have more rule of law, they'd become more democratic, and everything would be better. And, I think it was a very cogent argument to make at the time. 20 years later, we now know that this isn't the case, number one. Number two, instead of them becoming more like us, it's us who's become more like them. I'm not like, if you go back to the beginning of COVID, there was an editorial in the Wall Street Journal saying how the COVID lockdowns in China was the symbol of a failing system. That they had to log down their populations. 3 months later, we were arresting priests in Canada, priests in France for daring to give mass. I would have never thought that possible in a country of civil rights like Canada, that pastors could end up in jail. And so, you look at everything that's happened, the whole history of political science is deciding where the border is between the rights of the individuals and the interest of the group. Right. Yeah. And in Asian countries, the interests of the group predominate over the interests of the individual, and over the rights of the individual. The interests of the group are very strong and the rights of the individual are very weak. Well, I would argue that in the past 5 years, and especially since COVID started, the rights of the individuals all across the Western world keep on getting more and more crushed, less freedom of speech, less freedom of association. And against that, supposedly for the interests of the group, all these curtailing of the rights of the individuals, including now the outright confiscation of assets. Let's not forget that this is like, again, without due process, without debate in Parliament, it's like we're just taking your stuff for the interest of the group. We're just taking your stuff. So now, again, if you live in emerging markets, you start to think, hold on. What's the difference between deploying capital in the West where it can get confiscated, or deploying capital in the emerging markets where it can also get confiscated? Maybe I'm better off deploying capital in emerging markets where the long-term returns, the promise of long-term returns is actually superior.
You're right. And, that's a really great example, because I've been so focused on the, US, Europe confiscation of the 600 billion of USD reserves, which is precedent, right? What we should look at that as is like, that's the door opening to what could become a very slippery slope. And probably central banks all over the world are saying that asset, US dollar, isn't what I thought it was. And maybe it's time to rebalance a little bit. And we're seeing more allocations go towards gold or bigger baskets of currencies. In Israel, for example, they dumped a bunch of USD and replaced it with Canadian, Australian, and yen, actually. But, there was a micro...
Actually, on this, sorry to interrupt you, Jay.
Yeah.
But if you look at, the massive sell-off in bond markets, it starts in late February. If you look, I can show you the charts, but the massive sell-off in US Treasuries, the massive sell-off in German bonds, it starts in late February, following the confiscation of reserves. Because indeed, what's the point of owning bonds that deliver -2, -3, -4% real? Right. And that one day can go to zero. Like, the whole point is that, okay, these things are the ultimate safety. If conceptually these things overnight go to zero, then they're really not worth the paper they're printed on. Yeah.
And to build on top of that, you talked about the confiscation of all the oligarchs' assets, which is to say, you're right, at our discretion, if you're wealthy and Russian, that's enough. And, the Vancouver housing market's a great example, because that's been the safe haven asset, right? And people often, Chinese money isn't buying Vancouver real estate for the price appreciation. They're buying it as maybe the plan B, or maybe just a safe place to park a couple $1 million.
Absolutely.
Okay, now there was a micro example of this that occurred in Canada last year, or early, about 6 months ago. And I'm talking about the Freedom Convoy, right? Where a bunch of Canadian civilians had their financial assets seized by the Canadian government because they donated via a GoFundMe page, a completely legitimate and credible platform, to a cause they believed in. And then at the discretion of our leader, those financial assets were frozen. Their personal bank accounts were frozen, which, politics aside, Was
Sounds
that?
very Chinese, right? Sounds very Chinese, right?
It's a bit
It's
crazy. Yeah.
we're becoming like them. They were supposed to become like us, but we're becoming like them.
And again, I've heard way too many people talk about that event, and they're like, "Well, it was a good response. It had to happen to crack." And again, I'm like, everything's a precedent. It's always a precedent, right? The door is now open, right? So, will this become a
Look,
slippery slope,
if
and what does that look like?
look, if a political leader can decide to freeze bank accounts, to freeze insurance policies on people that he doesn't even want to sit down with to discuss, right?
Yeah.
On if there had been discussions, negotiations, and if a deal had been struck and then the other side hadn't stuck to their side of the deal or whatever else, but here there was no, these guys were peacefully demonstrating, asserting their rights to do so, and the punishment for having the nerve to go against their elected government was to basically have their lives upended. Um,
Yeah.
no, I think if you're living in any democracy, you have to look at this as a deeply, deeply disturbing precedent. And if you live in an emerging market, you look at this and think, okay, my capital is not safe in these types of countries. So where is my capital safe? Is it in Singapore? Is it in Dubai? Is it in Mauritius? It's basically in, I would say, offshore financial centers that that do not depend on that are geopolitically neutral. Let's put it this way.
Okay.
That are not, that as the world increasingly seems to be veering towards some kind of new Cold War, with the Western world on one side and Russia and China on the other, finding financial centers that are like the Switzerland of yore. But Switzerland is no longer that. So maybe the new Switzerland is Dubai, maybe it's Singapore, maybe it's Mauritius, I don't know. But yeah, this is where I think if you're a rich Saudi prince, if you're an Indonesian tycoon who's made a fortune in coal, and you think, because if tomorrow, who's, now that we've gone down this path, who's to say that tomorrow, if 20 idiots decide to hijack a plane and fly it into Sears Towers, does that mean that the assets of Saudi princes get confiscated? Or if MBS decides to kill a journalist in one of his consulates next time around, does that mean that the assets of a Saudi prince get, or we get more hurricanes and we blame climate change, so let's confiscate the assets of Indonesian coal miners? It's, you get to a point, it's like, where'd you stop, right?
100%. 100%. So then let me ask you, put yourself in the position of US leaders. And it's easy to say, like, these decisions are very short-sighted. They didn't see the repercussions. But is it possible, Louis, that there's a longer game being played where, the actions of the US administration to confiscate these assets obviously send a message to the world that the game has changed? I mean, they had to have known this, right? I would think. Maybe not. Maybe they're blindsided by their own decision. But let's say they knew what the consequences of this decision were going to be, and that it would sort of reshape the geopolitical landscape. Is there a longer game that could be in the minds of the superpower in the US? What do you think?
I don't know. I think they've just undermined their biggest comparative advantage. So if they've knowingly undermined that, I hope whatever the longer game is well worth it, because you've just, in essence, you're sewing off the branch on which you're sitting in. I personally don't think there is a longer game, just as there was no longer game with the COVID lockdowns or the vaccine mandates or anything else. It's just that, I think we increasingly live in a world, and I've written a couple pieces on this, and I'm sorry if I'm going to be a bit vulgar, but the guiding principle of our time is CYA. It's cover your ass. And we now live in a world where, something bad happens and you have 50,000 people that start screaming on Twitter that something must be done about the whatever bad thing that just occurred. And so politicians respond to this like, oh, something must be done. Oh, this is something, so let's do this. So, we have COVID. And obviously it's very sad and it's terrible, etc. Something must be done. Oh, Italy's locking down, so that's something. So let's all do that. Whether lockdowns work or not, etc., we'll figure out later. There is, we want to get back to our normal lives without admitting that lockdowns were a massive mistake. We have vaccines. Let's just force everyone to have a vaccine. That's something that makes me look strong, even if it pisses off dramatically 25% of my population, and even if it's forcing people to take vaccine tramples over people's civil rights and religious freedoms and whatever else, this makes me look good, so I'm just going to do it. And again, without thinking of the long-term precedents that this creates. I think the big problem with all of this, and you're seeing this in country after country, is that it tears apart the social contract. When you have all these measures that are taken very much in a knee-jerk reaction in a cover-your-ass way, and that end up antagonizing each time 15-20% of the population, and antagonizing them in a visceral way. The people who were anti-vaccine were anti-vaccine in an extremely, they felt passionately about this, right? And they went through, frankly, a rough 6 or 9 months, a year with no lives, right? It split families, etc. And so you end up dividing your society into ever more smaller pieces. And the risk of it all is that at some point, you don't have a majority of people who buy into the same social contract, and the whole thing implodes. I wonder if, this is, you look at the latest French election, with the parliament there basically being a third far right, a third far left, and a third in the center, you end up with countries that become less and less governable. And so I think that's, so we're in essence, heading towards a new Cold War with Russia and China, with semiconductors having been weaponized, our currency systems having been weaponized, our energy infrastructure having been weaponized, China in the process of weaponizing global supply chains. And we're doing this at a time when our countries have seldom been so divided on themselves. When World War II started, and even when the first Cold War started, 90% of Americans were gung-ho on the Cold War. And when World War II started, people were gung-ho. Here, we're starting all these with highly divided populations, which, again, it's problematic.
So, we've weaponized the currency, we've weaponized energy. Right away, I'm thinking, when do we weaponize food, right? And similar to the energy producing countries that lead the world, the majority, you could speculate, will align with China. Same thing in terms of food production, right? That's how I see it anyways. India, Brazil, China, biggest food producer in the world. Sure, USA over there on their own. Russia and Ukraine produce 25% of the grain that hits the global market, and we'll see how that shakes out. But, is that next in line, Louis? Are you watching that? What do you think?
Well, look, most economic activity is energy transformed, right? And this is especially true of food. I mean, food, by and large, is energy transformed. It takes a whole lot of energy to grow food. Or at the very least, it takes a whole lot of energy to put food on my plate and your plate. You need energy, you need diesel for the tractor, you need ammonia for the fertilizer, you need the energy to pick the darn things, to move it, to freeze it, so to cook it. So food is by and large energy transformed. So typically, when you have an energy crisis, you have a food crisis.
Right.
The two go hand in hand. We are in an energy crisis today, and we are in a food crisis today. I think we entered into 2022 on a very delicate balance for both energy and food. Now, arguably, this will be debated probably for generations to come, but had we not had knuckleheaded energy policies and food policies for 10 years, maybe Putin wouldn't have felt that he could go and invade Ukraine. Maybe the fact that we were so dependent on his energy and his fertilizer gave him the I would say the consumption to go and invade his neighbor. But we inherently strengthened his hand much more than we should have felt comfortable doing. But having done that, he's exploiting it to the max. So now the problem with food is it's always the weakest links that break first, right? And they are breaking. You're looking at Sri Lanka, you're looking at Laos. You're going to see the same thing all across North Africa and the Middle East, as you saw in 2011. So yeah, we are heading into a food crisis now. On the plus side, North America, the whole America's continent is fine on food. Where it's not they're net exporters. There's no real issue there. The issue will be all across Asia, Africa, and Southern Europe.
Right. That's where we'll see and are seeing already food riots break out. We're just
food riots, and then you'll get on the back of that, you'll get an immigration crisis like you had last time around when you had food riots all across the Arab world, the Arab Spring of 2011, which led to civil wars, and from there a massive immigration wave into Europe, which led to a further rise in populism. Right. All that is indeed problematic.
So you just mentioned the rise in populism. I got to pull on a thread here. What is more likely at this point, do you think, Louis? The U.S. formally entering into a hot war in order to protect their energy interests, or some kind of a civil outbreak within the United States as the internal divide continues to increase?
So I don't think the U.S. is the weak link here. To be honest, the U.S. is not the weak link, and that the U.S. is energy self-sufficient, more or less. Okay, sure, it needs some heavy crude that it needs to import, etc. But unlike previous cycles, the big difference now is when energy prices go up in the U.S., it means that money moves from New York to Texas or from Michigan to Oklahoma, but it broadly stays in the US relative to previous cycles where money went to Venezuela and money went to Nigeria or Canada, and the US would be pushed into a recession. So I think, on this time around, how does it manifest itself in the US? I think it'll manifest itself by the bankruptcy of cities in it'll be like the 1970s all over again, where New York City went bust and Detroit went bust, and I think this is how it'll manifest itself in the U.S. But overall, the U.S. produces food, the U.S. produces energy, so that's not where the weak link is. The weak link is in Europe. Right. Europe is the one that is going to be running out of energy, and Europe. I mean, right now, Europe has to make a very simple choice: do we turn back massively to coal? Option one, or do we start rationing energy? But rationing energy means economic depression. It means, that basically you cut off all your industry to make sure that the consumer still gets energy. So, I think in Europe, we've basically let the perfect become the enemy of the good, in that, over the past 10 years, we've shut down most of our nuclear. We've shut down a lot of our natural gas, on the hope that somehow there would be tremendous productivity gains in solar and in wind. Right. And those having not occurred, we're now left with no choice but economic depression or the burning of coal.
I suppose to pivot, tell me what you think about this, or to pivot and say, look, it gets cold here in the winter. We got to go back to Russia and make amends here. We don't have any choice. We have to do it. It's in the best interest of our people. And right now their homes are cold. We can't afford to heat them. We have a local energy source. Yes, it's hostile. Yes, we said we wouldn't. We would move on. But what do you think? Is that a possibility?
No, that's a third possible option.
Okay.
But I think you'll have countries like Poland will just say, no, we're doing coal.
Okay.
And in fact, Poland is already there. They're like cranking up the coal like crazy.
Okay.
So, and it'll be hard to sell. You're right. That's a possibility. Either way, you're going to have to sell a tough one to the European population. On the one hand, you've sold them that Putin was the next Hitler. So it's hard to sell them on we're going to send him a bunch of money. On the other, you've told them if we do coal, the planet has 5 years to live. So it's hard to do coal, but it's also hard to look people in the eye and say you're going to freeze to death this winter.
Totally. Yeah, and when things get bad
So
enough, right? Like civil unrest breaks out, and
well, this is how democracy. This is the good thing about democracy is I think what will happen in Europe is that as we enter into the energy crisis, some politicians will stand up and says there is a solution to this. It's coal. Vote for me, and I'll turn on the coal. And I think people, and as you do, your electricity bills will fall in by half because coal is by far the cheapest way to produce electricity. So for me, out of these three bad choices, coal is probably the path of least resistance. And I think this is where we'll end up, mostly for democratic reasons, because fundamentally that's what people will choose.
Interesting. Okay, now I want to pivot.
But there may be some pain. There may be some pain before we choose that.
I would take pain, I imagine, in order to get the population to choose that, right? Like you tend to respond to pain before people are more reactive than they are proactive most of the time. Okay, I want to pivot a bit to capital allocation. You hold a European passport, correct?
I do. French.
You have business in Hong Kong and Beijing and Canada, and houses in Canada. So talk to me first about the individual who is fortunate to have a bit of cash right now. They're not quite sure where to put it. It feels like nowhere is safe, and they're just looking to preserve capital. Where are you advising your clients look? Where are you looking? Talk to me about what you're doing in that scenario, Louis.
Okay, well, look, the first thing to acknowledge is we're in a bear market. Today we are in a bear market. And in my career, bear markets have only ended when you've had either the Fed start to ease and inject liquidity back into the system. We're not there yet. I think there'll be a story for 2023, but it's not yet a story for 2022.
And when you say bear market, you're referring to the broad equities market in the United States?
Actually, it's interesting because today we have a bear market in both equities and bonds, right? You have a bear market in equities, you have a bear market in government bonds, you have a horrible bear market in high yield credit, and you're starting to have a bear market in real estate. So just like for years we had the everything bull market thanks to massive amounts of Fed liquidity injections, as the Fed just about starts to pull back, because let's not kid ourselves that they've done much yet. We're starting an everything bear market, right? So now, how do bear markets end? Either with the Fed easing, we're not there, or with energy prices collapsing, we're not there either, because energy, collapsing adds a lot of liquidity into the system, or the US dollar collapsing, which allows central banks outside of the US to ease monetary policy and inject lots of liquidity in the system. Now, of these three, right now you've got none of the three markers you would look for in terms of calling for an end of a bear market, which means that you have to remain prudent, you have to remain very disciplined, and that your positioning has to be small. If you're a retail investor, a private investor, definitely making money in bear markets is tough. I've never played American football, but in American football you've got your offensive team and your defensive team. In a bear market you've got your defensive team on the pitch. The idea is not to score points, the idea is to not give points away. So that's the first, I think, mental hurdle to adjust to as you deploy capital. So that's number one. And if and when the Fed starts to ease, or if and when the US dollar starts to collapse, or if and when oil prices start to tank, then you can start shifting your team on the pitch. Then you can start putting your offensive team back on. But for now, you get your defensive team on. Now, this brings me to my second point, and that is that if you look at bear markets historically, the reason for bear markets, the reason we have them, they're not pleasant, but the reason we have them is typically to pass on the leadership from one group of assets, one set of assets to another. So if you look at, the 2000 bear market passed on leadership from US growth stocks to, in essence, emerging markets and global value stocks. And then in 2008, you moved from financials, which became complete dogs and stayed dogs for a decade, to initially commodities, and then in 2011 you had a commodity bear market that started, and the leadership moved to U.S. growth stocks again. Today, so I think one of the best things you can do during a bear market is look at relative performances. What's outperforming and what's underperforming, and it's tempting to go into what's underperforming the most, right? It's like, oh, this is sold off so much, I'm going to buy it and it's going to bounce back the most. But actually, what you want to do in a bear market is look for the new trends that will carry your next bull market. And what's fascinating to me amidst this carnage in 2022 in global markets is the massive outperformance of emerging market bonds. Number one, it's the massive outperformance of a number of emerging market currencies, and of course the outperformance of commodities. In an environment where growth is weakening, where the Fed is tightening, where the US dollar is going up. I'll be honest, if you told me at the beginning of this year, Louis, you know what, the yen's going to 135, the euro is going to 105, US bond yields are going to 3%. The S&P is losing 20%. Oh, and by the way, the best performing asset class will be emerging market bonds, emerging market currencies. I would have said, Jay, you're an idiot. Jay, you've never been through a single cycle, have you? Because each time you have a Fed tightening cycle, each time the US dollar goes up, emerging markets get taken to the woodshed. But it hasn't happened. It hasn't happened. Look at the outperformance of Latin American equity markets. China has been taken to the woodshed for the past 10 years. In the past 3 months, it started to outperform in the face of continued crazy lockdowns. So there's a lot of signs out there that I think that the next trend surrounds emerging markets. And so this is the next big bull market, which in this age of weaponization of everything makes sense, because if for no other reason that I think increasingly emerging market savers will now keep their savings in emerging markets rather than redeploy them in developed markets for all the reasons we discussed.
Which is a big discussion around deglobalization. And I've heard you talk about this. When we think about deglobalization, we think about Nike taking factories back and bringing them back on shore, right? Let's get our sneakers made here at home. But the bigger piece of this is the deglobalization of the financial economy. You said it, emerging market savers keeping cash in emerging markets. And that's going to be a big shift. That'll be substantial, because if you look at the balance sheets, of these countries, that's often emerging markets that have the healthiest balance sheets today, correct?
Absolutely. So no, it's a big theme of mine, the deglobalization of financial flows being more important than deglobalization of supply chains. And to be honest, I think we're seeing a sort of the ultimate example of it through Russia, right? I mean, in essence, we've just told Russia, you can't deploy your savings abroad anymore, right? You can make all this money, you can sell this natural gas, you can sell this coal, this iron ore, this oil. Whatever money you make has to stay in Russia from now on. And what's the end result? The Russian ruble goes through the roof. I mean, because if Russia's running current account surpluses of $300 billion a year, and now all of Russia's trade has to be denominated in Russian ruble, well, guess what? Nobody owns the ruble. So that means everybody becomes a forced buyer of ruble. Now, imagine if tomorrow, in the world of tomorrow, China says, you know what? I'm happy to sell you sneakers and iPods and iPads and whatever else, but you have to pay me in renminbi. Do you own it? Do you own any renminbi? Does your neighbor, does anybody in the Western world? Because everything you buy at the Walmart is coming from China. And if now that needs to start being priced in renminbi, then there's an inherent short position on the renminbi of more than $600 billion a year, since that's the size of China's current account surplus. And so you'd see, and I'm not saying this is going to happen, by the way. I'm not saying this is going to happen, but it's just, I think you've had the ultimate example of it with Russia. Everybody's scratching their heads thinking, ooh, what's happened with, the ruble was supposed to be rubble, according to Biden. The ruble was supposed to implode. Instead, it's at a decade high against every major currency out there. And this for two reasons. The first reason, of course, is that Russia decided to weaponize the energy markets, number one. And the second reason, just as importantly, is the deglobalization of financial flows.
Right. Yeah. As soon as you started talking about look for what has been outperforming, right? Immediately I was like, the ruble, oddly enough, the ruble has been massively outperforming. Okay. Similar question. So if it's
now, I'm not to be very clear, just so I'm not telling your auditors to go buy a bunch of ruble assets.
Yeah. No, I appreciate the disclaimer. And just for reference, yes, I never tell anybody what to buy on this show. I strictly, I'm the biggest beneficiary or benefactor of this channel. Somebody called me out for using that word inappropriately, incorrectly the other day. Anyways, I do this for my own good. So same question then, different context. So if it's the same answer, all good. You're not sitting on a pocket of cash, a pile of cash, looking to protect it. But your income's strong. You may not have a ton of savings, and you just want to start dollar cost averaging in to something. And we're talking about the next 10, 20 years of your savings plan, right? 10 years, whatever. Where, you got kids about that age, Louis. So where are you thinking that's a smart place to look right now? If you're just parting with a bit of cash that you can afford to lose and your time horizon's 10 years, what direction are you going?
Well, look, I think if you look at just in terms of pure cash flow generating capacity today, it's hard to beat the energy sector. The energy sector, because of ESG reasons, because it was such a horrible investment for 15 years, you can find all sorts of reasons, but it's been a dog with fleas now for so long. It had 6 months of rebound. The past 2 or 3 weeks have been pretty brutal for it, but you look at, and I would say the dirtier the energy, the cheaper it is, right? So if you look at, some of the large US coal producers are trading at 1x EBITDA, so, unless over the next 10 years, we completely walk away from, 100% walk away from gas, from oil, from coal, these things are inherently going to be 3, 5, 10 baggers. And here's a fun stat for you. In 2001, 86% of the world's energy consumption was carbon-based, basically coal, oil, and natural gas. So 86% in 2 decades ago. And of course, over the past 2 decades, we made tremendous efforts to move away from carbon, right? We've plowed money into solar. We've plowed money into wind. Guess what today the carbon mix, the carbon mix is, so sort of 20 years later? The answer is 84%. So we've gone from, over 20 years, we've gone from 86 to 84. So I'm going to go out on a limb, and that in 10 years time, we're not going to be at zero. And even if you're at 50%, which I highly, highly doubt, even if you're at 50%, a lot of these names are still making a lot of money. Now, these names are volatile. And so that's why, dollar cost averaging on them makes sense. But I would say any month where the sector is down 10, 20%, you pick some up. So energy is the obvious one. For me, emerging market equities is another. Okay. And granted, the two are fairly correlated. If a lot of the global energy demand comes out of emerging markets, those are the themes I like a lot.
And remind me, do you have an ETF focused on emerging markets? Is that correct?
We do have an emerging market debt ETF. It's called well, it's actually not emerging market. It's Pan Asian Government Bond. So the ticker is AGOV, AGOV.
Right.
So we do have that. We did have some Russian bonds in there. So we took a hit, and we basically had to mark these down to peanuts. So we took a hit on the Russian bonds when, and here I'll put my hand up. I didn't think I didn't think he was going to invade. I thought he was
Well,
I thought he was crazy, and I was wrong.
you weren't alone there. It's one of those events that we can look back on, and hindsight bias. It's always like, oh, we knew. It's so easy to see that this was going to happen,
Yeah.
right? In reality, it's never that way.
Well, for me, the main thing, everybody kept telling me, well, he's got 200,000 men at the border, and I kept saying, Ukraine's as big actually, it's a bit bigger than France. You don't invade a country with 200,000 men. You need like 2.5 million, not
Right.
200,000.
Right.
So to me, that made no sense, invading with 200,000. And as it turns out, 200,000 was too few to invade, or at least make a good job of it.
Yeah. Well, who I've got coming on the show later this week is Jimmy Rogers, right? And he as well. Last time I had him on, he was very bullish Russia, and he was buying Russian equities and Russian
look, in
bonds.
fairness, on pure, if you take out, and of course that's if you take out the political risk, which as it turns out was the wrong thing to take out, but if you took out the political risk in Russia, on paper it looked awesome.
Right?
Budget surpluses and
budget surplus, positive
trade surpluses,
Yeah.
positive real rates, and
Yeah.
undervalued currency, and I mean it ticked all the boxes you can
Diverse
possibly
commodity
want.
exporter leading into a commodity.
Yeah, it
market.
looked so good, and it was very easy. It was very easy, and I guess that's where we all become. We all have our biases. It's you want to believe in the story. The story was so good, and you want to believe in it so bad that you end up saying, "Oh, the political risk, forget that. That doesn't matter." And then it turns out that it's the only thing that mattered.
It's a good reminder about what investing really is, right? All right. Let me ask you about a couple, I'll call them like independent assets that maybe aren't as tied to the performance of any sovereign nation. Let's go to gold and Bitcoin. Do you have any thoughts? Are you positioned? Anything you want to share on? Start with gold.
Yeah, so I've always looked and argued in a number of papers I've written over the years that gold is, in essence, a derivative play on emerging markets. That the ultimate buyers of gold all lie in emerging markets. A third of physical demand is India.
Yeah.
Another 30% is China. Another 20% is the Middle East. Another 10% is Russia. I mean, basically, physical demand for gold comes from emerging markets, and for a number of reasons, not least the reality that either people don't trust in their banking systems, like in India, or people don't trust in their politicians, or simply cultural reasons. But so gold, when emerging markets thrive and as people get rich, and I would say especially people in the sort of lower middle class, of which there's just such a large number of them. If you look at China, if you look at India, we're talking about hundreds of millions of people. As those people get marginally richer, one of the first things they buy is some gold. And then gold does very well. And you saw this very clearly between 2001 and 2011, when you had a massive emerging market boom cycle. And during that period, gold went, did tremendously well, and, went up like 8 times or something. Then emerging markets have struggled since then. And so gold has, sort of, I think, been disappointing for a lot of gold holders. And I would say especially this past year, or this past 6 months, right? You might say, well, hold on, with the war, with oil prices going up, geopolitical uncertainty, you might have expected gold to do a little bit better than it has. I think that comes down to the uncertainty surrounding emerging markets. And once people realize, hold on, emerging markets are now in a structural bull market, then I think gold will do better. And this might take, maybe, we'll have to wait till the Fed says I'm done raising rates. So I would say, look, gold is a coiled spring for me, and I don't know when it's going to pop, but it's a cold spring that I think will pop at some point in the next 12, 18 months, whenever the Fed throws in the towel on the hawkish rhetoric. And when that happens, the US dollar will go down. The emerging markets will be visibly the parts of the market that massively outperform, and gold will do quite well. So I feel pretty comfortable talking about gold. I'm a lot less comfortable talking about Bitcoin. Partly, Bitcoin's history is very limited, and I would say that so we don't really have history of Bitcoin through full cycles, especially I would say Bitcoin with wide participation, because you could say, oh well, it was around 15 years ago, etc. But it was a tiny market 15 years ago. It was just a few people. In terms of being a broader asset class with millions of people buying and selling every day, it's a fairly recent new phenomena. But what's been pretty clear is that as the ownership of Bitcoin has widened out, it's basically become some kind of high beta NASDAQ, right? It's like days where the NASDAQ goes up, Bitcoin is up. Day where the NASDAQ is down, Bitcoin is down, and usually with a beta of 2 or 3 times the NASDAQ. Now, so for me, Bitcoin at this stage it's behaving like a high lever NASDAQ, and I'm not quite sure why you need that in your portfolio. I personally find the NASDAQ exciting enough. I don't need to have a high levered play on the NASDAQ, but I can understand why people would say, well, for a small part of my assets, I'm going to have some in case Bitcoin ever does fulfill its promise. Because if it does ever fulfill its promise, then it's a 10 bagger or a 50 bagger or a 100 bagger. So which means that, if you're buying it for the 10 bagger or the 50 bagger, it's in essence a call option, right? And you've got to price it as a call option with the volatility of a call option. And so, I can see why some people would want it. I struggle to see, aside from, let's say 2-3% of your portfolio, how it makes sense in a broader portfolio.
Okay, I have follow-up questions on both of those assets. If you got to jump, because I'm pretty sure I've gone over time with you. So
I've got one more, and then unfortunately I've got to jump.
Yeah. All right, I got to choose one. All right. What am I gonna do here? Okay, then let's. I'm gonna just mention both, and you can take your pick. So on the gold front, I've been wondering if it's in the US's best interest to keep the price low because China and Russia have been such aggressive buyers of gold. Isn't it in the US's best interest that gold does not appreciate in value? That's one thing I've been wondering about. And the second is I was curious that you seem to have no confidence that Bitcoin could ever become some kind of a reserve asset status, which would require it to graduate from the call option on the NASDAQ, which it absolutely is today. And I see it personally. I do have a horse in the race. I treat it as a speculation. It's all I can really look at it as right now. I think 14, 15 years history, similar. It's too young to know what it could become. But I was curious if you had any thoughts that it could become, because it's kind of like the one stock the whole world can buy, right?
Yep.
Included with network effects.
No, I think it can. I think it can. It's the fact that it can doesn't mean that it will, unfortunately. And so partly because something else might come along, partly because, so like I said, having some exposure to it for 2 or 3% of your portfolio makes sense. I think having more than that, you're exposing yourself to a lot of volatility. I'll tell you what I really don't like about Bitcoin personally. Is that it trades on the weekends, so that you don't even get a weekend off. Right. And then when you're in a bear market, like looking at your screens, and so you carry that sort of knot in your stomach. Usually you have Saturday and Sunday off, but there you don't even have that. So no, I think look, I think what we've seen with the confiscation of assets actually reinforces Bitcoin's proof of concept, right? If you're a Russian oligarch right now, you probably wish you had a key somewhere with $50 million in Bitcoins.
Sure.
And so, as we move into a world where you have more and more government intervention, where we are going to be pushed in digital currencies, where there is going to be an outlawing of cash, where indeed governments can seize your bank accounts because you gave $500 to the Canadian truckers.
Yeah.
All that is really a case for Bitcoin. So I'm not saying there's no room for it at all. I'm just saying, like, with the current volatility, you got to make sure you size it right. And I think if you're a private individual, a high net worth individual, the volatility is always what kills you. And you always end up, when an asset is very volatile, you always end up doing the wrong thing at the wrong time. You puke it out at the bottom because you can't take the pain anymore.
Yeah.
So if you keep the position sizing small enough and you just say, I'm buying this and I'm forgetting about it, then that's fine.
Okay.
And indeed, to play on the idea of that in the next 10 years, it will, fulfill the dream. On gold, I know there's a lot of conspiracy theories about the Fed manipulating gold and this and that. I'm not sure I'm such a believer. I don't think the Fed has really looked at gold that much in recent years. Look, it went up 8 times between 2000 and 2009, right? In 2011. And I don't think the Fed did very much about it. For me, the weakness or the lack of strength, it's not weakness, but the lack of strength of the past decade or so is a reflection of limited emerging market demand. And that's the part for me of the equation that's going to change.
That's my big takeaway from this conversation. I mean, one of many, but I feel like I need to become more familiar with the trends of emerging markets and the gold price, because it's not an angle that I've spent a lot of time on. You let me double dip on that final question, Louis, so I appreciate that. And, on the subject of manipulation, I'll just share a quote from, I ran a conference in Vancouver a month ago, and one of my speakers was put on the spot and grilled about gold manipulation. And he said, if you think the U.S. government's manipulating the gold market, you need to look at the U.S. Postal Service. They could hardly get a letter to your house yet you think they're manipulating.
I think that's fair enough. But
right.
But having said that, you should get it's called Hanlon's razor, right? The never look for conspiracy where idiocy can be a perfect explanation.
That's right. And any free market will inevitably have some manipulation. That's part of a free market. It occurs.
But it's hard for it to last very, very long.
Yeah.
But you know what? You should ask the question to Jim Rogers. He'd probably have a very different answer than me.
I will. 100% I will. Yeah, absolutely. Look, Louis, this has been super fun. Thanks so much for coming on.
Pleasure.
Appreciate your time. All right, thank you for watching this interview. Now, 3 things before I let you go. Number 1, I publish a weekly newsletter and I love writing it. I share my biggest takeaways and action items from the conversations that I have on this channel. In addition, my thoughts on current events, economic events, political events, and you can subscribe for free. Just hit the pinned comment right beneath this video, or just go to jmartin.club and you can subscribe on the website. I'd love to have you join the team. Number 2, ad revenue from this channel is donated to an organization that is super close to my heart called Zero Ceiling. Now, Zero Ceiling's mission is to end youth homelessness, and the way they do this is by giving at-risk urban youth the opportunity to relocate to beautiful wilderness areas and then provide them with supportive housing, career training, and just generally positive influences on their life. I love what they do. Check them out if you're interested. And number 3, if you prefer to listen to my content as opposed to watch it, you can find me wherever you listen to your podcasts. Just search for The J Martin Show. All right, thanks again.